Now, I would like to bring up a counterpoint to this that somebody has shared, which is total housing units versus total population, which looks like it has been increasing. So people look at this and say, okay, well, if you take a look at all the housing units compared to the population, we're actually on an all-time high. So this is not housing starts, this is total housing units.
Yeah.
The problem with this is this doesn't take into account all the illegal immigration that has happened over the past decade, which is 10 million people, which is a huge percentage of people that need a place to live. The other thing this doesn't take into account is the change in demographics over the last 60 years, which is the number of people per housing unit.
Yeah.
So 70, 80 years ago, you used to have six
everybody
people
was married.
living.
Yeah. Right.
Everybody was married and everybody had kids, and you piled people into bedrooms.
Yeah.
So every house was a 3-bedroom house with 6 people in it.
Right.
Today, it's the exact opposite. You have 1 or 2 people living in a housing unit, and most of the new housing starts are massive square footage because you have to for profitability for being a builder, but very few bedrooms.
It's not profitable to make a small, cheap house.
Exactly. And very few bedrooms. You look at a lot of 4,000, 5,000 square foot houses, they're 3 bedrooms. Yeah. Sometimes there may be 4. And so when you look at the usability, you can't just look at square footage. You can't just look at housing units. You have to take it all into account. There's fewer people living in every housing unit. There's a lot more population than is currently being counted. Mm-hmm. And there are more people who need a place to live than there are places being built for those people to live.
Yeah, so, let me give you one more factor that you didn't mention. A lot of people look at population, and the birth rate has definitely been declining. There's no question about it. Mm-hmm. Looking at population growth over the past decade or two is not an accurate way to look at it. What you've got to look at is the population growth that happened 30 to 36 years ago, because that's household formation today. So you've got to lag that by over 3 decades. Millennials love to compare their lives to their baby boomer parents' lives and whine about how bad they have it, right? But that's really a very inaccurate thing. I mean, they've got some valid complaints. I'm not going to totally dismiss it, but the millennials are on the slow life plan. So everything they do is about 6 years behind schedule. So if you want to compare your baby boomer parents at age 30, you have to look at yourself at age 36, millennials, okay? And if your life is comparable in terms of your financial life, then you're not getting a raw deal. Okay, so that's the comparison. Then millennials will say, well, our parents didn't have student loans, and they're right. College is a scam. Okay, it's a ripoff. But guess what? Your parents did have that you don't have is a huge expense. Children. Okay, and I would venture to say that children are more expensive than student loans
over the long term. Yeah.
So you're having children, but you're doing it 6 years later. You're doing everything 6 years behind schedule. Okay. You were all digital nomads for 6 years. You saw the whole world. Your parents didn't get to do that. Okay. So, it's just different, right?
Yeah.
So,
well, also that, a lot of people say, okay, well, that 6-year lag makes a huge difference in the amount of wealth you can accumulate over a long lifetime. But the other thing about that is that by and large, the younger people have not entered into home ownership yet.
Well, that was one of my points is home. Right. I didn't say it, but home ownership, marriage, household formation, whatever, right? It's 6 years behind schedule.
Right. And so there's a bunch of pent up demand. Like, some of this is statistical, but some of this is anecdotal as well. There's a bunch of pent up demand from people in their 30s and young 40s who have been waiting on the sidelines because they thought it was going to crash. And the moment it becomes affordable again, they'll buy. Yeah. There's a huge amount of people who are renting that would prefer to not rent.
Right. So that's called shadow demand, right? During the Great Recession, we heard a lot about shadow supply or shadow inventory because there were homes being held off the market or that were in the foreclosure process. It was moving very slowly and they didn't come onto the market. Right now, we have a lot of shadow demand. We have a lot of millennials that have been living at home or, don't even have a place to live because they're traveling, they're being digital nomads. But, that gets a little tiring at some point, or they have roommates and they're ultimately going to split up and form their own household, even if it's a solo household, okay, with just themselves. So these factors are different and they warrant peeling back the onion. And I'm glad you're doing that, Joe. So what else do you want to share from this? What I liked about it is everything, you've got to weigh the probability, right? And at the end of your very long X post, you basically say that, look, the possible downside to waiting is less than the possible upside, right? Or I don't know if I said that right. Anyway, the point is that there's a higher risk you could be suffering more and your affordability could actually get worse, because if interest rates come down, it's going to cause prices to go up even more. I mean, it surprised everybody that prices have appreciated during a time when the cost of money has tripled. I mean, that's just shocking to most people, but they didn't count on the lock-in effect of all the cheap mortgages out there. And they didn't count on, the issue of there's just no supply.
Yeah. I think the downside remains that I've been saying for 3 years now. If you do not own a home, your personal residence, there's a good chance that if it hasn't happened yet, you'll be prevented from entering the housing market forever, that you will be a renter forever. You won't be able to break in after that because you don't get any of the upside by renting. Your rent will increase every single year and you will not be able to lock in a payment for the rest of your life with a fixed rate mortgage. If you do buy, there is a chance that things get so economically terrible, devastatingly terrible, that unemployment spikes to a point where we have enough people forced out of the high interest rate mortgages that they bought in the last year that brings some supply online that forces prices down.
Yeah.
In my opinion, that would probably be sufficient for a Fed pivot and lowering interest rates. But if that does not happen, there is a chance that prices come down. At some point, though, if that continues, you just let that play out long enough, prices come down fast enough, everything else would have had to get so bad that you do eventually get the lowering of the interest rates, because a recession, depression, prices collapsing is a reversal of inflation. That is deflation. And if we get deflation, the Fed doesn't have to fight inflation anymore, which means they can keep positive real rates while pushing interest rates down to 1%. In which case, then you can refinance and you can lower your monthly payment. And so to me, it seems that the potential downside to staying out of the real estate market outweighs the downside to stepping in.
Yeah. And even in the cyclical markets where the risk is higher, your area, Phoenix for one, but definitely, the West Coast of the United States, the expensive Northeastern markets, and South Florida where I am, these markets have softened a bit and adjusted a bit because they reached just insane highs. With everything you said, I'd say that risk is higher in those markets. But if you're buying an entry-level house in a linear market, your risk is pretty low to the downside overall when you look at the real cost of housing, the payment, the opportunity to refinance, et cetera, versus the possibility of waiting and the fact that there's just so little of that inventory being built and it's been in such short supply and it just can't be economically built anymore. The builders, they can't afford to build those low-cost houses. So it's a very interesting scenario. On top of all this, sales activity is way down. I mean, anywhere from 15 to 30% or so, depending on what market you're talking about. So the realtors are starving. The mortgage people are starving. They're complaining like crazy, but don't let that influence you too much, because that does not tell you the dynamics of the housing market and the supply demand issues and all that.
Right.